Hello. Hey, thanks for joining me today. Thanks for giving me a few minutes of your time. I appreciate it. Today, I want to talk about a recent article from the National Association of Home Builders, Ion Housing, called Homeownership Rate for Younger Households Declined. And the article was written by Zhao. And what she wrote is that the homeownership rate for younger households, and that's defined as people under the age of 35, dropped to 36.3% in Q4 2024, which is the lowest level in 5 years. And of course, this decline is not surprising given the current affordability challenges, higher interest rates, and overall higher cost of living, and of course, in a lot of markets, a really tight housing supply. And so the younger buyers are having a hard time achieving home ownership. But it's interesting because I think inadvertently, or not necessarily the headline news, there was some interesting data lower in this report. And I'm going to share it with you, and I'll do it by sharing my screen here. Yep, this is the article from the NAHB. And here you see the home ownership rate. It dipped down. Of course, much better than in 2016, but dipped down. Still, you see the dip. But you know what I want to focus on? I want to focus on a couple other things. First, this chart. This is really interesting. What this chart says, homeownership by age of householder, this shows that age groups 45 to 54, 55 to 64, and 65 and over actually saw their rates of home ownership increase in the last year. And not only slightly, say 45 to 54 increased from 70.3 to 71, and 55 to 54 saw an increase from 76 to 76.3, and 65 and over is similar, but I saw that increase as very positive. I think that's a really good sign. And there was another really good data point that was in this article and in this data, and that was also not a headline part, but right here under household formations, you notice how the blue is owner-occupied and the red is renter, and you can't really tell it because it's not scaled the same, but there's actually was more household formation for people who bought a house than people that started renting. And in fact, above it actually says the numbers. It said that renter household formation grew by 109,000, while owner-occupied household formation grew by 783,000. And so what does all this mean? Why is it important, and what does it all mean? Well, you know what? The young folks are having a hard time getting in the market, and we understand that. And so we really have to work with them on affordability. We have to coach them and their families, their parents, on the importance of trying to get to home ownership as soon as possible, and how parents can help. We need, of course, to be pretty well versed in DPAs and other programs. Help these young buyers with financial literacy and budgeting and saving for a down payment. All those type of things we need to help them with. But we also need to recognize the growing appetite and housing demands for some of the elder groups or middle-aged and elder groups. They seem to be, growing household ownership. And so there's an opportunity on both sides of the scale. I'll put a link to this down below. I also did a LinkedIn post on this article earlier today. You can check out my summary on LinkedIn. You can also get a link to the article on my LinkedIn. Like I said, I'll put a link below. I appreciate you spending a few minutes with me today. I hope you found this interesting. I hope you found it useful. It's certainly something we can apply as we serve our clients. With that, I hope you're having a great day, and I look forward to talking again with you soon.